So we had a client in late 2019 who had a liquidity event. He sold a company and he ended up with a figure in the high 7-figure range before taxes. And usually with those types of things, there's what's called a holdback. And on top of the holdback, you have tax liability. And so he didn't end up with high 7 figures. He ended up with much lower 7 figures, but he had a really, really big tax bill to pay in 2019 and in 2020. And so we started working with him in late 2019. And then what happens in the beginning of 2020, right? COVID. And at its worst, the stock market, S&P 500 went down, I think it was 37% by middle of March. Most of that within 45 days, give or take. And so we're talking to him. We update the plan multiple times throughout the year to make sure, hey, we're still on track. Let's stress test this. Do you still feel okay about your risk tolerance? Do you feel okay about your income needs? Those types of things. You hear that person? They think by far they are the most important person within a 100-mile radius. Nobody cares about your motorcycle. That is that loud. Anyways, so this happens within 90 days of the relationship starting, right? And he sticks with it. He doesn't sell whenever the market's down. And when we look at the beginning of the year, he had a sum of money. And when we look at the end of the year, he was up about $300,000 unrealized. But this is not a story about somebody staying the course even when it's hard and having to white knuckle it. This is a story about tax loss harvesting, and specifically proactive tax loss harvesting, because what most people do, and I'm going to say people and firms, because DIY investors are just as susceptible to this, is they wait until October, November, December, and they say, do I have any losers that I can get rid of that just haven't performed very well? And they go, yep, this one's down, this one, okay, we'll sell and move to these. And that's how people usually perform tax loss harvesting. But if you're proactive with it, then you can reap the rewards as quickly and as effectively as you can while you still can, because eventually all tax loss harvesting goes away. If I sell a position that's down today for a lower value and reinvest it in another position, which is what tax loss harvesting is, eventually the market will go back up, right? And so that's what we did for him. In March, April, and May, we tax loss harvested 7 different times within that time frame. Every time his accounts were down more than 7 to 8%, or a position was, we were able to do that. And so from a tax perspective, at the end of the year, he showed a realized $200,000 loss. I'm going to say that again. For tax purposes, whenever he got his 1099, he showed a $200,000 loss. But when we actually look at the account over the year, it went down and then came back and ended up $300,000 higher. That's what proactive tax loss harvesting does. And for this particular client, and the reason I wanted to tell this story, is he had a really, really big tax bill. And so that $200,000 saved him at least $40,000 in taxes. When you think about, he's probably in a 20% capital gains tax rate. That's not even including state tax and a Medicare surcharge. It could be upwards of $45,000 to $50,000. And so I would encourage everyone who listens to this, hey, be proactive with your tax loss harvesting. Have systems in place, or make sure you have an advisor who has systems in place so that those, I don't want to say gains, but that tax alpha doesn't get left on the table. Because unless we're just very poor investors or the world crumbles, things will eventually go up and to the right. The key is, whenever things have those little dips, if you can take advantage of it while it's still possible, there's some real tangible value in that. And that's what this client saw. And so I just want to end with saying tax loss harvesting is very, very important, especially as you get up the income and the wealth ladder. And if you've amassed sizable non-qualified or brokerage money, it's something that you need to be doing. All right, until next time, thanks all.